Hi friends, in this video we're going to talk about another important topic with regard to finance related current affairs for upcoming RBI Grade B 2019 and SEBI Grade A 2019 examination. We are going to discuss some of the important MCQs on the topic investment by foreign portfolio investors in debt. So a recent circular has been issued by RBI which is titled as investment by FPIs in debt. Now this circular makes certain changes in this investment by these FPIs in the debt related securities, and this is going to be the area of discussion of this particular video, and we are going to discuss it through the MCQs. Now if you are a paid student of our courses, then you can access the entire circular in detail along with these MCQs in the course itself only. Now, before proceeding forward, let me quickly tell you about the excellent results that we have achieved over the past few years. Now, in 2017, in RBI Grade B, we had 27 final selections from our students, and in NABARD Grade A, we had 11 final selections from our students. And in 2018, we repeated the same success story. And in RBI Grade B, we had 70 plus final selections, and in NABARD Grade A, we had 26 final selections. Also, in 2018 SEBI Grade A examination, out of the total 84 selections, 41 of our students they made it to the final list, and in the IBPS AFO examination, our students have got 100 plus interview calls. Now, if I talk about the different individual courses that we are providing, then they include RBI Grade B, SEBI Grade A, NABARD Grade A, RBI Assistant, and IBPS AFO examinations. Now, apart from running the separate courses for all those individual examinations, we are also having some combo courses which you can avail. So we have a combo for RBI Grade B, NABARD Grade A, and SEBI Grade A. We are also having a combo for RBI Grade B, NABARD Grade A, SEBI Grade A, RBI Grade B, and NABARD Grade A and SEBI Grade A. So we have all the requisite combos that you can choose from, and you can choose the appropriate course as per your requirements. Let me also tell you about our new course, which is very important for all the banking exams. This is the QRE course. QRE, that is quantitative aptitude, reasoning ability, and English. So all these aspects which are very important for all the banking exams, they are going to be covered in this particular course. So let's start with the first question. As per RBI notification on investment by foreign portfolio investors in debt instruments, which has been issued recently, foreign portfolio investors are now permitted to invest in. Options are treasury bills, commercial papers, municipal bonds, or units of domestic mutual fund. So friends, this notification has been issued by RBI recently, or I should say a circular has been issued by RBI in this regard, and this draws the attention of authorized dealer category 1 banks to the foreign exchange management regulations of 2017. So it says that in order to broaden the access of non-resident investors to debt instruments in India, foreign portfolio investors, they are now going to be permitted to invest in municipal bonds. So municipal bonds, they are now going to be a permitted security for the foreign portfolio investors. Further, it says that FPI investment in municipal bonds shall be reckoned within the limits which have been set for FPI investment in state development loans or SDLs. So the limit which is there for state development loans is going to apply for municipal bonds. All other existing conditions for investment by FPIs in the debt market, they remain unchanged, and authorized dealer category 1 banks, they are to bring the contents of this particular circular to the notice of their customers. So this is what this notification is all about. The crux is that FPIs, they can now invest in municipal bonds, and the limit is going to be same as the state development loans. So friends, now we can easily answer this question that FPIs, they are now permitted to invest in municipal bonds. So our answer is going to be option number 3. Next question. As a measure to broaden the access of non-resident investors to debt instruments in India, RBI has recently permitted foreign portfolio investors to invest in municipal bonds. FPI investment in municipal bonds shall be reckoned within the limits set for FPI investment in. Options are equity shares, state development loans, convertible debt securities, or treasury bills. So friends, this we have just discussed on the previous slide only. What we have discussed? We have discussed that the limit for FPI investment in municipal bonds is going to be reckoned within the limits which have been set for state development loans or SDLs. So our answer to this question is going to be option number 2. Next question. Foreign direct investment means investment through capital instruments by a person resident outside India in an unlisted Indian company in 10% or more of the paid up equity capital of a listed Indian company, either of the above or none of the above. So friends, this notification or circular, it broadly deals with foreign investment. So foreign investment, it is any investment which is being made by a person resident outside India in capital instrument, that is equity of an Indian company or to the capital of a limited liability partnership or LLP. So this is basically the investment which is being made by person resident outside India in an Indian company. And this can be divided into two parts. One is FDI and another one is FPI. Now in this particular question, we are being asked about foreign direct investment or FDI. So friend, FDI means investment through capital instruments by a person resident outside India in an unlisted Indian company or in 10% or more of the paid up equity capital of a listed Indian company. So this FDI, it would be termed as FDI, and investment would be termed as FDI if it meets any of these criteria. Either it is being made in an unlisted Indian company or it is being made exceeding 10% of the paid up equity capital of a listed Indian company. So it's very simple. So friends, answer to this question is going to be option number 3, that is either of the above. Next question, which of the following is incorrect about municipal bonds? They are issued by urban local bodies. They aim to raise money for financing specific projects, specifically infrastructure projects. In 2015, SEBI made fresh guidelines for the issue of municipal bonds for enabling the urban local bodies to mobilize money, or none of the above. So friends, this question is basically about the concept of municipal bonds, which is the core of this particular circular which has been issued by RBI. So friends, if you talk about municipal bonds, then they are basically the bonds which are issued by urban local bodies, which include municipal bodies and municipal corporations, to raise money for financing specific projects, which is in most of the cases infrastructure projects. So friends, urban areas in the country, they are governed by urban local bodies, and for the development of the urban areas, urban local bodies, they need money, and one of the important source for raising of money is going to be municipal bonds. Now these bonds, they are attracting attention as the urban local bodies urgently need money to finance infrastructural expenditure. So these bonds, they are attracting the attention because the urban local bodies, they need money. Why they need money? Because now we are focusing on big urban development projects or development of smart cities. So this would require lots and lots of money, and that is why the municipal bonds, they are attracting lots of attention. And in this regard, in 2015, SEBI also made fresh guidelines for the issue of municipal bonds for enabling the urban local bodies to mobilize money. So friends, the answer to this particular question is going to be option number 4, that is none of the above is incorrect. All these are true in the context of municipal bonds. Now let's move to the next question. In the context of state development loans, SDLs, which of the following is incorrect? They are dated securities issued by the states for meeting their market borrowing requirements. Purpose of issuing state development loans is to meet the budgetary needs of state government. Higher the fiscal strength of a state, higher will be the interest rate it has to pay for SDL borrowings, or all of the above are true. So friends, if you talk about state development loans or SDLs, then they are basically dated securities, that is they are for a particular date, which are issued by the states for meeting their market borrowing requirement. Purpose of issuing these state development loans is to meet the budgetary needs of state governments. So through these particular loans, state governments, they can meet their budgetary needs, they can finance themselves. So each state, they can borrow up to a set limit through state development loans. It is a market oriented instrument for states to mobilize funds from the open market. Higher the fiscal strength of a state, lower will be the interest rate it has to pay for the SDL borrowings. So if a state is wealthy, it has high fiscal strength, then it means that the interest rate is going to be low. It points to the credit worthiness of that particular state. If the state is wealthy, the state is fiscally well, the state has enough funds with it, then the people, they will be willing to invest even for a low interest rate, because they are now not worried about any default being made by the state. So that's why higher the fiscal strength, lower is the interest rate that has to be paid for STL borrowings. Further, Reserve Bank of India or RBI facilitates the issue of state development loans securities in the market. So friends, the answer to this particular question is going to be option number 3, which is going to be incorrect, because we have just learnt higher the fiscal strength, then lower is the interest rate for STL borrowings. So guys, this was all about our discussion. If you are having any query, you can mail us at hello@edutap.co.in, or you can reach us at 8146-207-241. You can call us or you can WhatsApp us. And I would also recommend that you visit our website www.edutap.co.in for regular updates and important content on the respective examinations. Thank you guys. I wish you happy learning and all the best from the entire team.